this video we're talking about Crocs, ticker symbol CROX. So the very first thing I want to talk about is just the chart, explain some of the growth. We'll talk about this new HeyDude acquisition, we'll get into the financials, and then we'll talk about how to trade it and price targets at the end. So if you're new, welcome, thanks for joining. And looking at the chart here, we can see that just pretty steady, in the past, and then we get in here to 2020. We can see that 2020, with the pandemic, clearly told it to sell off, and we got about a $9 bottom, and then out of nowhere, just this long-term, really steady, really consistent growth all the way up to almost $182, which is awesome. Its recent sell-off, this is work right here, has been all because of the pandemic, the new strain, things like that. And then this largest recent big drop, that was related to the HeyDude acquisition. So really like it. The company clearly likes it. They haven't done really any M&A, and so for them to make their first one and make them this size, that's pretty significant. And so we'll talk about that deal really quick. The deal itself was a $2.5 billion deal. 450 million of it went to the CEO. They gave that to the CEO of HeyDude as a part of a stock deal in Crocs, and then the rest, I believe, is done through, if not all of it, is done through the revolving credit facility. But here we're looking at, what is the HeyDude acquisition? What is that going to do to Crocs' growth? Well, it's going to add 20% long-term revenue growth. So we can see that the revenue growth from HeyDude is actually going to outpace the revenue growth from Crocs. Both brands' long-term adjusted operating margin, 26%, and you'll see that this will immediately start to affect the Crocs EPS. So the way that they're going to make this thing, $1 billion by 2024, I think right now HeyDude is doing about $700 million. They're going to invest in the marketing. They're really going to push the digital stuff, the digital capabilities, Crocs' wholesale relationships, the distribution. With that comes supply chain, and they're going to test selective retail for enhanced brand awareness. So really just looking at what market is this going to do and how this is going to work. So this does a great thing. It opens them up to the emerging markets into Asia over time. That's where a lot of the growth is. A lot of Asian fashion right now, they wear a lot of Crocs, kind of like streetwear. So pretty interesting. I'm not going to go through this whole thing. It is quite a lot to talk about and to go through, but just know that this is very, very strategic acquisition, and it does make a ton of sense. So when I come over here, I want to check out Crocs, CROX, and we're going to look at the financials. So the very first thing I notice is that in 2020, $3.22 EPS, they go to 7.56 in 2021. And they're still growing at 2020. Revenue starts at, in 2020, $1.3 billion, $2.2 billion in 21, and then $2.8 billion in 2022. So just consistent growth all the way through. We can see that the cash from operations is increasing, free cash flow is increasing every single year, same store growth, gross margin. So it looks really good. On paper, it looks great. Return on equity, this might actually be a little bit lower if you add in the treasury stock, but that's still high enough that even with the addition of the treasury stock, they're doing fine, which is good to see as well. So I like looking at that. What I do want to check out here, though, is I want to see the income statement, and we're going to look at the gross profit. And this is what I want to know more about, is the selling, general, and admin, the SG&A costs. So they're investing a ton of money into their marketing pushes for HeyDude and for the Crocs brand itself. And so I really believe that they can sustain it. And this is going to be the main driver, is how well do they implement that marketing, the SG&A, and how well can they keep growing this so that the difference between these two numbers, which is right around 50% right now, can they actually increase their efforts and make it better? That's going to be the big question. That's really what's going to drive the long-term margin for this stock. When I get in here and I look at the multiple for the stock, we can see that it's trading at a 14.23 times forward multiple. That is absolutely really cool, because what that means is that we're getting this insane price action here, and the stock is still under 20, which traditional finance theory tells you that if you have a PE below 20, which is price to earnings, that you've actually got a value stock. You got something that the market is undervalued. And the fact that the revenues and the earnings, again, I'm going to go back to it, that the revenues were growing and the earnings were growing very consistently, that is quite a story. That is something very, very good to see. So it means the company is doing a great job. And so the way that I would play it is I would wait for just the bottom. I would wait, get a little bit of solid price action. You'll see it kind of start to revert back to its SMA line here. It's obviously clearly oversold. I wouldn't doubt if we maybe even get just a little bit lower than its current $120, $123 price range. Might get 115, might even pick 110. At that point, that's where I would buy it, and I would just ride it all the way till the end of the year. I think this is a stock that's going to have to prove itself as far as the M&A deal being good, but if all things stay equal, they're going to do a really, really great job. So I would be very excited to see the company, up here in the $200 range, maybe the $225 by the end of the year, assuming that all those revenues stay the same. So yeah, guys, that's it. That was a very quick, brief overview of how we're looking at ticker symbol CROX. If you liked the video, be sure to comment and subscribe to it. Leave your thoughts down below, and we look forward to seeing you next time. Thank you, guys.